Good morning, traders. It's Monday, January the 13th. Taking a look at the charts, we've got the SP 500 daily chart. More or less, the market continues to hold up. We had some pretty good volatility last week, but more or less, the market recovered. It's been holding up back up above this 5-day moving average, and the equities market's up about a third of a percent. Nasdaq up almost half a percent. So we're seeing that money continue to just grind and move into the SP 500. Again, we're in this upper reversal, or not this upper power zone here for our cycles, more or less. When this pink line that you see up here is in this range, it usually means we're in the power zone. The market will just keep grinding higher. Now it looks like a huge trend, which it is, but you'll notice these little side steps and these little moves. You have occasional pops in price, but then you just kind of grind your way slowly higher, and that's what we're doing here. We're trading sideways again, slowly kind of just eating away time, and over time it can just slowly keep grinding its way higher and climbing that wall of worry. Now we had a little correction here. We just had another correction here. Obviously, after corrections, the market is primed and ready to have another push higher. So we are on this verge here of potentially seeing it continue to pick up speed and move higher. Now, interesting news coming out, that Boeing plane that crashed last week. Now it is out that more or less it was shot down, which is not a good thing. Good for Boeing, not good, obviously, for what's going on. And who knows if it was an accident or not. Seems a little interesting, the timing there. But either way, interesting news. I'm sure Boeing stock, I haven't looked at it. I think it's BA. Is probably up in pre-market. Yeah, it's doing fairly well. It's up a little bit in pre-market trading, 133. So it's up from the pullback there on Friday. Let's take a look over at bonds. Bonds moved up last week, the last couple sessions. Today they're pulling back down. Overall, we look at the big picture of bonds. It's in this big bull flag formation. Going back in time, we had this big run up. Now we're having a big consolidation. This red line here is the 200-day moving average, long-term support area. It's also a horizontal support right through this zone. We had this consolidation through here, so this level is going to act as a support zone for price to settle down in here. So we've got the 200 and the support level. It's trying to find some stability and trying to move higher. We have seen it had a pop here, pulled back, had another strong pop. That was a news-based pop, which is why it fizzled right back out again. But overall, it's trying to hold its ground here and move higher. If we look at our cycles, we have seen our intermediate cycle put in a bottom here, another bottom here, and if we start to break down through this trend line, it can start to hold above it. We're trading over here. We need to start to see it break up through here. We could be off to the races for this to start moving higher, and that would mean the equities markets are starting to weaken or roll over. Now, if we take a look over at the VIX to see what kind of fear there is in the market, the fear, very little, back down to near this blue line here. Also, if we look at the put-call ratio, we've got a lot of these lower green wicks way down here. The last time we got down into these levels where we've seen it, it was way over here, and then the market had a big pullback, a correction. So we're down at this level where there just really isn't much fear at all. Can't fight the trend. The market is still going up. But overall, the sentiment is there that we're in that last kind of stage where we're probably going to see some type of potential pullback a little bit deeper. Now, the market is primed and ready. It just did have a little bit of a correction. We'll see if that was enough to keep it going. The put-call ratio, the timing's not always on. It can be delayed. So I don't follow the put-call too much. But overall, it's just interesting to see when we get these when the average price is down near these lows, and we're seeing some pretty extreme spike lows. It just goes to show there's some pretty strong sentiment that people are very bullish, expecting higher prices, and that's when you just kind of start ratcheting up your stops to be protective, which we have. We've locked in profits. Our stop is in place and moved up, and hopefully we'll hit our next target today, tomorrow in the SP 500. Stop will move higher. We'll lock in more gains. And we're slowly preparing for a market to potentially reverse on us and to be protected. Looking over at metals, gold down a third of a percent. Obviously, it's had a run, consolidation, a run, a big consolidation, a run up. A lot of this run up, two things fueling it. more or less, or three things actually. It's a bull flag starting to break out, so people pile in, catch that move. We had news, obviously, missile strikes, or missiles being fired off, ramping that up, and then of course the U.S. dollar has been pulling back as well. And of course, those three things all kind of coming together to push gold to some new highs. At this point, it's overdone. It's very similar to one of these pullbacks over here where you see it run up and then it takes a breather, runs up, took a multi-week breather, has run up, and now it's having a multi-month breather from this much larger run. So overall, based on this, I would think it's going to be something similar to this over here where we see a 1, 2, 3 or 4 week consolidation, so maybe 2 or 3 more weeks of potentially lower slash sideways pricing for it to potentially start another run to try and break through this 1600 and beyond. Looking over at gold miners, they've similar type of price action, just amplified. They just move percentage-wise more. It's run up, it's flagged out, it's been rotating to the upside. We're down at this 20-day moving average. We got the 50-day below it. Overall, it's making a series of higher highs and higher lows. It is pulling back and acting a little bit oversold, but overall, again, we're going to see gold, silver likely flag out, trade sideways or lower as it tries to build this kind of work off some of this overbought territory, so it'll have some fuel for another run higher. But at this point, we've seen a rally, a pause, a rally, a pause, and I would be expecting some type of rally going forward here, especially if we get any type of uncertainty news overseas. Taking a look over at energies, natural gas up 0.25%. It is starting to test these. If we take a look at the price action with our cycles, more or less when we're down this lower reversal zone down here, the market's trying to put in a base. You can see some type of pop. We had it again over here, again over here. We are back in deep into that area. It's just dragging out much longer than we anticipated, but this is why we're not jumping to get into the trend unless we have a very clean setup, which would be a test of this level down here. So we see another flush out down to this level. This would be a significant Fibonacci measured move. It's a previous pivot low. If it got down there, I think we would stick a toe in the water with a small position for a knee-jerk reaction, or we need to start to see it build a base, a bull flag through here where it's come down and it's starting to show that the momentum has reversed to the upside. We saw it build a little bull flag here. We saw it build a bull flag here. And that's kind of what we're looking for. We're going to get above this pink, this 20-day moving average like we've seen before, or at least hold up underneath it with some bullish price action. And that's what we're looking for going forward before we get long. Looking over at crude, up 0.25%. Overall, huge price swings last week. The momentum is shifting to the downside. It is at support. It's at support trend line, just connecting these lows. This is a significant support trend line across here. We are into this area. It's also the 200-day. It's also the 50-day. It's oversold. And we can see our short-term cycle here. Our short-term cycle, which usually lasts 3 to 7 days of some type of bounce, we could very easily see the market have a little bit of a bounce or just trade sideways and hold its ground, and that cycle will work itself higher, and then it could very easily continue to go lower. But more or less, if you take a look at this pink cycle line, we are below this red line. It is trending down, and usually when it's trending down, we're going to see price continue to move down and collapse there. Last but not least, take a look at the US dollar index. It's had a big pullback in price. Obviously, this is what's helped fuel metals. As the dollar falls, we're going to see the value of gold go up. Overall, it's a pretty nice bounce. I think it's got potential to keep on going, but this is a pretty deep correction. This might be a little more concerning in terms of the bigger picture. If we zoom back in time, you can see the price action here where price has rallied up. We have a pullback, we've got another pullback, we've got another pullback, and now here this pullback is a little bit deeper. It's not just a shallow one like right across here. It's gone into an A, B, C, a much larger correction, big gap in price. We've seen this huge gap down, so it's done a little bit of damage. It's still holding up. It's still making higher lows. it's still overall making higher highs, although you could argue here this is a complex little correction here where we do have now a lower high, but we still have a higher low. So we'll see how the market recovers. Maybe this is going to start to stall out over here and the dollar will start to potentially break down. This could spur on a huge rally in metals later, but we'll see how things shake out. Overall, the trend is still up for the dollar in terms of the longer term view. But this pullback is a little bit deeper. Maybe the market stalls out short here. Maybe it comes up for a double top. We'll see how things play out. But overall, it is oversold and it's having a bounce. And we're going to see how it performs over the next few weeks, whether it's starting potentially a new downtrend, which would spark a rally in commodities. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.